Hello everyone. Today we are talking about one of the most important steps when buying a property in the UAE, understanding the mortgage process before you start viewing properties. I'm very happy to welcome Miyad from Bidzil Capital, a mortgage and capital advisor based in Dubai. Mia, thank you so much for accepting my invitation and join this conversation today. You'll be helping us answer the most important questions future buyers should know before applying for a mortgage.
Thank you so much for having me here. I'm very excited to go through a very detailed, important questions that most mortgage clients have, and we can look into them one by one.
Okay, let's start with the first and most important question. What future buyers should know about their mortgage eligibility?
So basically, if it's very important that it's case to case, profile to profile. Of course, salaried, they assess differently than the self-employed. That's why when they reach out to either to their banks or even to their mortgage advisor, they can understand that what is their eligibility, what are the factors that they need to look into before applying for a pre-approval. And yes, it will help them to understand that how much they can get eligibility for.
And there is typically a minimum salary that banks are required before accepting a mortgage application?
Minimum salary is required is 10,000. However, if the salary is 15,000 plus, we can fit them in most banks. With 10,000 salary, we can fit in 2 banks. However, these are all factors based on today's regulations and terms of the banks.
And what would be the minimum employment period of time that someone can apply for a mortgage pre-approval?
Ideally, for the salaried profile, it's 6 months to 1 year. However, we have banks that even with the 1 month salary, they can apply for the pre-approval. But for them, they need to apply for the pre-approval beforehand to understand that if they can get an eligibility.
What about the fact that the person is still on probation period or probably they just changed jobs recently? Would this affect their eligibility for a mortgage?
Of course. Basically, we have 1 to 2 banks that they can look into give the pre-approval to these clients that they just changed their jobs. But then again, with 1 month full salary, they can even apply for the pre-approval. Of course, we will need more documents to provide their previous employments, and then we can take that more forward.
What about non-residents? Are they eligible for a mortgage in the UAE? And what are the difference between the conditions for a resident and a non-resident applying for a mortgage?
Of course, non-residents, they can get a mortgage. However, they need to provide all their source of income documents from back home country. However, there is another product that we have with one bank that even if they don't have a source of income, but they have a good cash in one of their bank accounts, they can even apply for the mortgage. Of course, they need to buy the property within UAE, so they can use one of the banks of UAE for getting a mortgage.
All these are applicable mainly for employees. What about self-employed and business owners? What are additional requirements that banks usually are asking them to provide?
Usually self-employed is a little bit complex. That's why we assess them one by one. Every case is very unique, and especially self-employed has different nature of business, how old is the company, how is the turnover of the company, and all of these factors are plays a big role. And based on that, we can see that what is the eligibility of they can get a mortgage. Of course, for the self-employed, even if the company is only 6 months old, they can still apply for the mortgage. Depends how much they can get the loan. It depends on how old is the company.
We are hearing a lot the term mortgage pre-approval. Let's explain what exactly does it mean and why it's so important to have it before starting going for property viewings.
A pre-approval is a conditional approval from the bank, which they assessed based on the client's source of income, eligibility, what are the liabilities they are having, And of course, very important factor is that how they were being paying for their liabilities back then. For example, if they have a personal loan, credit cards, all of these things are very important factors. And based on that, the bank will see what are the maximum eligibility they can give them, and they can give the pre-approval. One very important factor that which I really follow is that when the client is going for the pre-approval because they don't have a property in hand, what I usually do, I will go for the maximum eligibility. So in case if they find a property higher, they can, it's very easy for them to put an offer right away, which even if they find a property lower than the approved loan amount, we can reduce it very easily. And usually pre-approval is free of charge, valid between 30 to 90 days, and it's free of cost. Even if they could not find a property, it will get expired with no effect on their credit report, on their business, which is very important factor, is that before you become committed into signing a very big and important contract between you and the seller, and you have to risk a 10% security check for you to be not risking all of these factors, or is very important to get your finances sorted, get the pre-approval done. You find your ideal house, you can put an offer right away, because usually sellers will need to see a pre-approval, especially for the mortgage buyers, that they need to see this pre-approval to be able to lock the property for you, which is a win-win for you.
Absolutely, I totally agree, and thank you for explanation, because usually what we struggle with, some home buyers, property buyers, they are coming for viewings and they don't have the pre-approval in place, and it can happen that actually we are finding the best property, they like everything and they would like to purchase, but they cannot, because without pre-approval, sellers usually don't accept to sign the MOU, and unfortunately they can lose that great opportunity.
And it's a big risk even for them to find, if they're a mortgage buyer, they can only buy a property only based on bank finance, and for them to risk into a big commitment like that, it's very good for them to get a pre-approval beforehand.
Absolutely. And what would you advise? Someone should go to a bank and ask a pre-approval, or it's better to work with a mortgage advisor, and probably he can get more options, and you can advise the best terms and the best conditions?
I think maybe I can give a very maybe ideal example for that. For example, if you want to go for a very important meeting into a court, you would not go alone, you will take a lawyer with you. When you want to buy a house as well, you will go with someone very expert into all of these things to be in a, even risk-free, even when you are signing a contract with a seller. When you have a mortgage advisor will be by your side, helping you to even minimize all of this risks. For example, valuations, for example, what if the final offer letter does not come true for any reasons, which all of these factors are possible. So if you have a mortgage advisor, will help you to understand all the pros and cons in the mortgages. What are the terminologies of the bank? What are the signatures? What are the things that they need to do? How they need to look into their assets, and how they can even increase their assets into properties. So all of these things happens when you have a mortgage advisor to help you out to understand all of these.
I absolutely agree, and personally I always advise to get and work with a mortgage advisor. Let's say someone got the pre-approval. What about down payment? And what is the difference between a resident and a non-resident?
A down payment, it depends profile to profile. Usually for the salaried resident, which is the first time buying a property, and if the property is below the 5 million, they can get up to 80%. Why am I saying that? Is that based on the central bank policy, if the property is above 5 million, they can avail of around 70% loan to value. If the property is below 5 million, they can get 80% if it's their first mortgage property.
Okay. Beside down payment, there are some fees, purchase fees that the buyer have to pay. What about DLD, agency fee, and other purchasing costs? Are they included in the mortgage value, or the buyer should cover them?
We used to have that we could cover it into a mortgage, but right now we have only one bank that they can add it to your mortgage as a personal loan. Personal loan is only for 4 years. This is only for those people that they really need to have DLD and agent fees to be added to their mortgage. However, usually mortgage takes, they can get up to 25 years. Of course, depends on their age and if they want even shorter, if their income allows, they can still go for it.
Let's say we reach to the signing of the Form F, MOU. What is the realistic term that usually takes from the signing until property transfer? And precisely, this is important to explain to the sellers because sometimes they are those that more in rush, they would like to have the property transferred and of course they will get their funds as soon as possible. So explain us in realistic terms how much you should wait to go through all the process and get a successful property transfer.
So if I want to explain it, if the client already got a pre-approval, let's say from signing the MOU till the transfer, usually it takes between 4 weeks to even sometimes 12 weeks because it depends on the transaction. If, for example, if the seller has mortgage on his property, for example, if it's a developer handover, what if the developer delay for NOC for any other documents? So it depends between 4 weeks to even 12 weeks. Sometimes we actually add this additional extension in case if there is any third party delays and it's out of the buyer's control, we have another 30 days of extension in the contract.
So we have to be patient, trust the mortgage advisor and follow the process. Thank you so for answering that. You have mentioned developers. What about getting a mortgage for off-plan resale property?
Off-plan, usually I can say off-plan mortgages is very different than the normal mortgages. It's because you can get a mortgage for off-plan, but then it's only few developers that it can cover. For big developers such as MR, Damak, Dubai Properties, Nakhil, very big developers, very limited. And also very limited banks, they can do an off-plan mortgage. And the very important factors are that the project needs to be at least completed 40% and it should be paid at least 50%. So the buyer should at least cover the 50%, then he can get a mortgage. Of course, the 40% of the project needs to be completed to get an off-plan mortgage.
From your experience, what are the most common mistakes that property buyers are making in all this mortgage process, before and after?
I think the most important mistake that they will do is that they apply for pre-approval very late, and they need to understand that getting a pre-approval, sometimes it depends bank to bank, sometimes it depends that if we have holidays, what are all of these factors, we need to look into it. And if they find a property that they love to, they cannot put an offer, which I witnessed it myself, which I ask all the clients, please apply for the pre-approval. It's free of charge, it's valid for 60 days. Even if it gets expired, I can reapply it again. I can reactivate it again. So this is the very common mistake some of the clients they do, which helps them to get their finances sorted before they go for viewing, wasting their time back-to-back viewing, even agents' times. Absolutely. And taking them back-to-back. So it helps them to get the pre-approval first and to have a peace of mind that they can get a pre-approval, and then with the peace of mind they can put an offer for their property when they have one.
What is the validity of pre-approval and how many times you can reapply?
So usually it depends bank to bank, 30 days to 90 days. And even for the activation, it takes 2 days, and there is a free of cost of the activation. So why not apply for the pre-approval?
So it is important to have always valid pre-approval, even though the research process takes longer sometime until buyer will find the right property. Mm-hmm. And we are here to assist and advise. But the most important is to have this valid pre-approval always available.
Well, another factor that I want to add is that sometimes clients, of course, most of the clients, they feel that they are eligible to get a mortgage, which is it's the most in most scenarios. But sometimes there is something that they are not knowing. For example, too many liabilities. If they have too many liabilities, for example, they have 5-6 credit cards and they don't even use it, and they say that, but I'm not using it. Well, it's not my, so it should not be count. Actually, it counts. Every product from the bank counts as it will deduct from your eligibility. So when you reach out to your mortgage advisor and you share all of these informations, if you need to look into a couple of factors, you have time to look into the factors before it gets too close to finding a property.
Let's explain a bit the valuation clause, because when they are buying with a mortgage, there is a bank valuation in place. How soon this can happen and why it's so important, and how this can affect the final mortgage approval.
Usually valuation clause in the contract it depends on the mortgage buyer. Some mortgage buyer are having the differences. A very important thing is that if you got pre-approval, let's say based on a 4 million property value, but then the property that you're buying is, let's say, 4 million, but then we do the valuation and the market value comes 3.8 million. Bank will give you based on 3.8 million, not 4 million. So that's why if we don't cover it into the contract, then what is the scenario? What can happen? So that's why we ask the mortgage buyer what is suitable for them. Some clients, they said we don't have the differences to pay extra. So what we usually do, we say that in case if the valuation comes below the asking price, the client or the buyer can withdraw the offer without any penalty. Now, some clients, they are okay with 5%, some clients even okay with 10%. So it's a very case to case. Now, very important and very good news is that once we sign the MOU, we immediately go for the valuation, which is take 1 to 2 days to valuation to be done. Let's say maximum 3 days. And then the report will come within 2 to 3 days. So the property will be only blocked for the sellers. For the seller side, it's going to be blocked only for 1 week. So it's not a harm to the seller. So it's a very quick process on the valuation. We can understand what is the market value.
Okay. Miad, thank you so much for sharing such valuable insights into the mortgage process in the UAE.
You're welcome. Thank you so much for having me.
And if you have further questions about mortgage eligibility, pre-approval, financing options, feel free to reach out to me and Miad. We'll be happy to assist you, answer all the questions, and guide you through the whole process. And if you are looking to purchase a villa in premium villa communities in Dubai, reach out to me directly. I will be delighted to help you find a property that truly matches your requirements, priorities, and lifestyle. Thank you for watching.